This conference will now be recorded.
All right, good afternoon, everybody. This is Greg Morton. It is Sunday, December 26, 2021. This is the Canslim Growth Stock Investors Weekend video update for the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, this weekend review is for educational purposes only, not recommending any stocks or securities to buy or sell. All investing has substantial risk of big losses. So we want to learn first and only then invest. And of course, this will be the last weekend update I do in 2021, as next weekend we'll be starting a new year and getting ready for that, even though we'll be looking at the last week in 2021. So topics for today, we're going to look at the impactor, market review, and market direction. Last weekend, I said in no man's land, getting whipsawed. This weekend, I'd say maybe some light at the end of the tunnel. Current trading plan, last weekend I said not, meaning not trading. And then this weekend, I'd say maybe time for a bit of increased exposure. We'll look at a checklist of constructive things to do this week. We're going to look at the watch list, my watch list from last weekend, the top tier watch list, and I'm just going to share some thoughts on that because it was a little bit of a different weekend. And then we'll look at our educational meetings, which can still be ordered for educational purposes. So the M factor, the M in Canslim, as we know from Bill O'Neill, is the most important letter in Canslim. Current things we want to look at in this order of priority is the action of leading stocks, the actions of stocks owned, which doesn't take long, still have a pretty short group teaching portfolio, and then market pulse, distribution day count, price and volume on the indexes, as well as the coloring book, which is my personal supplemental market direction tool, as well as a tool for post analysis, and the group teaching portfolio. So let's exit this and jump over to MarketSmith. This will look at the NASDAQ first on the daily chart. So this week, of course, it was a 4-day week. So it started out slow, but then you can see the index came up through all three of the moving average lines, which is very constructive. Looks like we sort of had a second leg down. We did undercut this most recent low, so that killed the rally on the NASDAQ right there. That was officially a failure. But indexes did come up, had nice high range closes, very low volume, but holiday week, so that's to be expected. The S&P 500, sort of see the same thing, came back up constructively through all the moving average lines and actually set a new all-time closing high on Friday. So again, volume still declining, but holiday week. NYSE retook all the moving average lines barely, so constructive there. And same thing on the Dow, came back through three moving average lines, 10, 21, and 50, closed above those. In fact, the low of the day held above those, didn't even touch them. So constructive. Then on the negative side, the Russell, while it tracked the 3 days up like the other indexes, still below the 200, still below the 50-day. So room to improve there. And the S&P 600 still stuck under the 50-day. So room to improve there, but still overall more constructive week than we've seen lately, with an asterisk for the low volume. And then if we look at the coloring book, my spreadsheet, so we had 3 days, which I labeled as buying or accumulation days this week. The count is still off. I only have 6 buying days, 13 selling days in our 25-day window, which starts at the orange dot. But the MMTS on the main 6 indexes flipped from red to green or red to yellow, as it was on the Russell 2000. So these have been whipsawing back and forth and sometimes even skipping yellow. So those are big jumps. It just confirms the volatility to me that we're seeing. IBD went back to uptrend resumes on Thursday, the last trading day of the week, and the window of opportunity opened back up based on the guidelines that Steve Sweats uses. So that was constructive. We also saw some breakouts this week that were nice, Micron, ICLR, and NTR. So Oh, and HLT. So those are good ones to keep an eye on to see if they make progress. That would be very positive if they can do that instead of failing. Power trend's still off, so we're just keeping an eye on things. Group teaching portfolio, we're only 16.4% invested because the market's been so bad, and up 14.24% year to date. You can see we made a little bit of progress this week, but we had some really wicked bad days and a bad month overall in December to wrap up the year so far. So we'll see if we get a little bit of a bump this week as we're getting ready for earnings season coming up soon, and the quote theoretical Santa Claus rally. We'll see if that happens or not. Some of us adults are believing in Santa Claus and his rally more than the kids are believing in Santa Claus sometimes, I think. So we'll go back. That was everything I wanted to look at. So in light of this, I would say this weekend, hey, maybe seeing some light at the end of the tunnel, maybe okay to increase exposure a bit, and only increase more is those positions that you put on, or partial positions or pilot positions, start to work and make progress. And we may very well see that week. I don't know, or we may have a terrible week. We'll just see. So my current trading plan on the buy side is this going into the week, maybe. So just kind of look and see. And still time for some of this, some serious thinking and pondering and studying also. So key takeaway thought, just remember this all through next year too. Canslim works better when the NASDAQ is trending above an uptrending 50-day moving average line. Canslim works best when the NASDAQ is trending above an uptrending 21-day EMA line. And currently, based on what happened this week, we do have both of these in our favor suddenly. So that's sort of nice. So some things to do now, checklist, keep doing your normal weekend routine, even if it seems difficult to do. A little bit easier this weekend since we see some light at the end of the tunnel. Look at the relative strength line to identify leading stocks right now showing strength. The RS line always answers the question, is this stock leading right now? Now again, it might not be set up for an entry. It may not be a Canslim stock, but at least the RS line will answer that question for you. And then you can look for your setups and your parameters for Canslim stocks. Start your annual post-analysis on recent market action as well as your trades for this year. Take a trading course. These both were out recently. Go back, review some of the old Market Smith Classic webinars. Some of those are open for non-subscribers. Get ready for 2022. If you don't have a set of written sell rules heading into the year, you just need to stop and do that. That'll be one of the most productive things you can do this coming week. Look at the rally day, follow through day system, and re-entry rules. We covered those at our last meeting. And watch the IBD podcast. Well, I'm sorry, it's a week ago now with Jim Ropel. After watching that, start looking ahead. What are the new names that could lead next year when the M improves? You know, not talking about Upstart, Affirm, Zoom, DocuSign. We're looking for new names because we are going to have some new leaders next year, without a doubt. And start your 2021 notebook. I use 2 pages for each weekend. Do my watch list on the right-hand page and my IPO and EPS work on the left-hand page. And I'll show you, oh, I have it in here. So here's the notebooks I really like. I found these on Amazon. So I just do one of these per year. I just finished up the blue one for this year, or finishing it up. These have nice thick covers. They don't wear out over the year. The pages are thicker, they don't bleed. So you can use both sides of each page. In other words, each weekend can be an open book with a left-hand page and a right-hand page. And so it has enough for the whole year, and then a few extra pages. How many pages is it? I can't remember. Seems like it's 150 pages. It's really 75 sheets. So you have 52. So you have, 23 extra ones to do some notes on a course you took or whatever you want to do. Trade journal, whatever you want to put in there. So those are great. Here's my blue one from last year. It's a little more scratched up than that, but it's held up well. everything's in good shape. And then I got the white one for next year because I just thinking of a clean sheet of paper going into the year after a difficult 2021. So let's look at a few charts. Go back to Market Smith. I usually don't share this, but I'm gonna look at my tier 1 watch list from last weekend. And so what was unusual about that, if you've watched my videos on doing a weekend routine, you know that my tier 1 watch list is usually very narrow. A lot of times it's only 2 or 3 or 4 stocks is sort of what I think of the best. But last weekend it got longer. I think I had 14 on tier 1, which is very unusual. Market was in a correction, but I saw a lot of setups all of a sudden. So let's just look at the weekly charts. These are all Canslim stocks. They're liquid. Most of them are going to have institutional sponsorship. All of them are stage 2 bases or lower, if I remember correctly. And I was just looking for constructive setups. They could need a little bit more work. So we do most of our work on weekly charts. And I kind of rank these in the ones I like best. You can see they're liquid, 160 million per day. This one doesn't have any top fund ownership, but when I go down here and bring up the funds I've flagged, it has 5. So that, and I probably have about 30 flagged beyond the ones that are in IBD. So that meets my criteria. And so this is just a nice, oh, sorry, this one was stage 3. Let's see if this was stage 3 on a daily. Yep, it is a stage 3. Sorry, I tried to stick with mostly stage 2, but this one's been in a pretty long base. It's traded tight while we're in a correction. RS line's trying to head up. And then West Pharmaceutical, it's got stage 2, cup with handle. It's only 16% deep with an 8% handle. Yes, very constructive, good fund ownership, good Canslim numbers over here on the left, good return on equity, good pre-tax margins, 180 million per day. Applied Materials, setting up again, nice flat base, only 11% deep, type trading, so that's constructive. Again, ownership, Canslim numbers, good return, really good return on equity and pre-tax margin. Wow, those add up to 85 together, 55% return on equity. That's phenomenal. This one broke out this week, stage 2 base, 16% deep. It was a consolidation, so it went beyond 15%. So it wasn't a flat base, but it is so close to a flat base, I don't mind almost treating it as a flat base. So broke out with some volume. It was only a 4-day week. Look, you had some volume this week above average, so that was strong. IQV, set flat base, 5% from the pivot, so it's close to getting extended after this week. Charles Schwab, again, flat base, 10% deep. It's just really a nice tight base in a really volatile, choppy market. RS line, trending up, picking up. LRCX, stage 1 consolidation, 21% deep. Again, good numbers, good ownership. So last weekend, it was just unusual that there were so many constructive setups. This one's a little V-shaped looking. It's only 24% deep though. Be nice to see that one form a handle. So Harmony Biosciences, Steris, chopping around in that 5% zone, but came out of a stage 1 flat base. Microchip, again, hasn't made any progress, but came out of a stage 1 consolidation. So these are early stage bases. They could go up and form another base and break out again, and still be, in a position to even add some more. Allegro Microsystems, 20% deep, a little bit deeper base, not quite as good of numbers. So, return on equity is down at 13.4, pre-tax margin is only 16, only trades 27 million a day. So a little further down the list, these aren't quite as strong as the ones I put at the top, but they were still set up technically. So I put them on there. Although remember, fundamentals, the left side of the chart, all this and this down here is weighted 2/3, and the technical picture on the right is only weighted 1/3 under the Canslim rules. So NSA, this is one of the REITs. We really don't like REITs too much. I don't too much. They do well. They're defensive, but beautiful RS line. and breaking out of a stage 2 flat base if one's going to buy REITs. And then the last one on the top tier list was CMO Motion Tech, which last weekend it was already, because these are weekly, I was already extended, but I still put it on there because it was coming out of a stage 2 consolidation. Maybe it pulls back, who knows? But so these were ones to watch. So that was unusual for sure for me to put that many stocks that were setting up on a tier 1 watch list, but it was kind of showing me, hey, we've been correcting long enough that now we're starting to see some real bases, and we should see some more in real Canslim stocks. So go back over here. We looked at that. So our monthly online meetings, the big meetings are once a month. Last one was Tuesday, December 14th. This is what we covered, looked at the M factor, looked at some Canslim nuggets from IBD Live, went over the new MarketSmith tools, and then did 2 big educational topics. So this meeting actually went more than 2 hours. So looked at the rally day, follow through day system, and then earnings season coming up, and viable gap up setups. And then we looked at Olaplex, which was a recent IPO, looked at some watch list stocks, and then we did Q&A and did some stock evaluation and review of stocks that you guys ask about. So our next meeting, I just put it on the calendar recently, Tuesday, January 11th, 7 p.m. Eastern. You sign up at the Stockyard Meetup site. It's the only place you can sign up for those. If you're a first timer, I send you a courtesy copy of the December meeting recording, the slide deck, and any related links that I sent out to all the attendees. So here's a list of prior meetings. You can order these. They're $10 each. They go up after the first of the year. It's $15 each. So if you're interested in order them, now save a little money. Here's the 3 on writing your own sell rules. So this is 4 or 5 hours of teaching on just writing your own sell rules. So that's the one that you really can't go through that without coming out of it with your own sell rules, and I show you at the end. And the third one, my written sell rules as they were at that time. They get tweaked a little bit over time, so maybe I've added one thing since then, or one concept, but that'll get you through those. And then here's some other ones. Talked about earnings season, to hold or not to hold. Complete weekend routine I did in October, and then November did building in deeper. In December, I showed you the agenda. I don't have it on this list yet. So here's the contact information. Greenville East Side IBD meetup site is the one I run with IBD that has all the resources on the message board, including the coloring book, and the group teaching portfolio are linked on there. So everybody can join both of those, no charge. You can email me if you want to order prior webinars. Just tell me you're interested in that, and I'll send you the whole list and the ordering instructions. You can follow me on Twitter, and then you can follow me on my Stockyard YouTube page, which is where you're watching this video. So Merry Christmas. We finished that yesterday, so I hope that went well for everybody. And then Happy New Year. And just a final reminder, this is 2022 for us. There's going to be a lot of guys on TV that think they have a clear picture to the end of the year. They're going to give you predictions. Their view is just like ours. They have no clue. They're just on TV talking about it. You're really a lot better off if you listen to people who say, I don't know what the market is going to do. I'm going to wait till I see what it does, and then I'm going to interpret it, and then I'm going to follow my rules. So it's a cloudy view. I have no idea. We're going to start out good. We're going to start out bad. We're going to have a long bear market, short bear market, strong year like 2020 was. Once we got past the COVID bear, don't have a clue, but we will walk through it together, look at things each weekend. As Bill O'Neill said, you can do it. We're starting with a clean slate and ready to go. So get your notebooks ready, get your weekend routines geared up, get your record keeping going, and follow your written sell rules and do post analysis, and you'll make significant steps along this trading journey, which is a difficult mountain to climb, and it quite frankly never ends. There's always something new to learn. So that's it. Hope you guys have a happy new year. Enjoy some bowl games this week. And we'll be back next weekend as we get ready to kick off the year. That's it. See ya.